Hey, Think Realty, thanks so much for joining us today on the podcast. I'm Eddie Wilson, the founder of Think Realty. Founded it in 2013. We've been in business for over 10 years, helping real estate investors find their pathway, their journey, and helping them along their way to make good decisions in the real estate investing space. And I'm super excited to have our guest today. We'll talk about that in just a second. But first, I want to say thank you to our podcast sponsor, which is CV3 Financial Services. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip rental, cash out, or rate and term refi needs. Visit cv3financial.com/Think Realty and support them and thank them for supporting us. They're a great organization. I know they can help you out. Our guest today is Derreck Long. Derreck, thanks so much for being on the show today.
Yeah, thanks, Eddie, for having me. You know, I've known you for a long time. I've known your teams for a long time. You know, I know a lot of your organizations from Think Realty and AAPL and everything else. So I love what you've built. I love what you've done.
Thank you.
So, you know, I really do thank you just for having me on here and having me on your show.
Yeah, absolutely. And you have not been a stranger to our show, but some things have changed in your life.
That's
and so you probably, if they've listened to you, if they've been to our conferences or whatever, probably know you more as the self-directed IRA guy, right? Like that's pretty much what you've been known as.
That's correct. So I've had a very unique career. I was the officer of a different self-directed IRA company for a long time. But even following that, I've now actually worked with a law firm as well on IRA-related issues. I work now with an oil and gas company, Eckard Enterprises, and I honestly work also on your GRC team.
Yeah, you do.
So I get to do a lot.
Yeah, you're involved in everything, which is awesome. You know, I think real estate investors, like kind of stepping back a little bit, are in a really unique place, where for probably the entire time they've ever been investing in real estate, they've been told, focus on cash flow.
Yep.
And over the past 2 years, they've been told, cash flow doesn't matter anymore. There is no cash flow. Interest rates are stealing your cash flow. Sorry for your luck. Play the long game. Play the 30-year. Buy these things. Get a long-term note, right? It's like, and I feel like now cash flow is like this dirty word, where even when you talk about it, people almost are skeptical because everyone else is saying, there's no cash flow out there right now. You can't buy for cash flow. And I know there's a lot of really frustrated investors who have moved into this space in the past 2 or 3 years for the hope of gains, you know, for the hope of not just 30-year appreciation, but like short-term gains. Like they want to see 10, 11, 12% on their money. And so the reason why we've been bringing in a lot of, I would say, additional investment opportunities is because real estate is a diversification strategy, right? Yep. When we say investing in real estate, we're not just talking about buying a single family house.
There's 10 different ways to do that.
Right, there's so many. And so why wouldn't we continue to diversify into hard assets, right? Because that's what that's the benefit of a real estate investment, is that it's physical, it's tangible, right? It's not the stock market, it's not controlled by somebody that you don't know.
Touch, feel, see, look at it.
It's not crypto and you're wondering who actually owns it all and where does it transact.
God, the hackers come and take it.
Right. And so what I'm really excited about you coming on the show and why we invited you on the show today is because there are people out there really chasing some cash flow, and they need it. And they need it. They don't just need the 30-year, they need the cash flow today, right? They're playing this game, and they need short-term wins and long-term wins. And what you're doing in your space, I think, provides some of that. So do you mind just kind of give us the 30,000 foot view of what you're doing and what that means?
Yeah, so the biggest problem I actually always ran into being an officer of a self-directed company is you have to remember, I got to see behind the scenes. I saw everyone's good investments, everyone's bad investments. And not saying that debt is bad, right? But if you're solely reliant on the debt of an asset to make profit, that can actually create issues at different times of year. Now, when interest rates are super low, that's good.
Right.
But as we see currently now that interest rates are rising and no one's able to refi or sell or get approved, well, debt's not necessarily the best way to make profit. And so honestly, seeing that, I as an individual started looking for exactly what you said, not just cash flow, but I want a monthly payment. I want to know that I own a hard asset, like you said, something I can touch, feel, see, look at, A. And B, I want to know that I can also sell the asset if I need to.
Sure.
And there's only a couple of asset classes out there, and one of them that I found that I've enjoyed, and not just me but my family, is owning true mineral rights.
Okay.
And so if you're ever looking to buy a mineral right, you should look at a few key things. A, is the mineral right producing? When I'm saying mineral rights, a lot of people relate it directly to oil and gas.
Oil and gas, right.
But we're not talking about drilling for oil. We're not talking about the big tax deductions. We're talking a much safer way. It's just owning mineral rights. It's the most boring investment you'll ever do.
Yeah.
Okay. You want to know that it's producing with big oil companies, Chevron, Exxon, Pioneer, something that's a big oil company that you can research, which means that you already know how much oil or gas they're pulling out of the ground, and they're going to pay you every single month.
Sure.
So what's nice is you can actually buy these per acre, typically 8 to 10 grand an acre.
Okay.
You're not putting money in a fund. You're not putting money in an LP or something like that, right? It's you're the owner. You choose to buy it. That's it.
Yeah.
And on average, you can see some of these that will pay as high as 1 or 2% a month.
Wow.
Now, when I say 2% a month, I want you to understand that's probably very short-term thinking.
Sure.
Long-term thinking, it's 1% a month's pretty realistic.
Yeah.
And I like
so
it.
just extrapolating that out, I mean, you're talking about a 12 to 24% rate of return.
That's correct.
That's a lot.
That is, and you got to remember though that since you're buying it per acre, I can sell the acre.
Right.
I can do a 1031 exchange into the acre. I can use a self-directed IRA.
Appreciate based on the value of the minerals being sold?
So I would argue that they head inflation. I don't want to use the term appreciate because, and what I mean by head inflation is the same minerals you're buying today you might buy for 10 grand.
Right.
10 years ago you'd buy for 2 grand.
Sure.
But that's the inflation aspect.
Yeah.
Ultimately, mineral rights are actually depleting. So when you go to buy them, you're buying them, that oil company's down there, they're drilling for oil or gas.
Right. And someday it runs out.
Exactly.
Whenever it does.
Right. And what happens is you'll see that they actually have a time frame when they think that mineral right will run out. And they'll tell you 25 years, 50 years, 10 years.
Yeah.
The oil companies will tell you before you even purchase it, which is really nice.
Yeah, very nice.
So that's what they're expecting.
Interesting.
Yep.
So what are some of the other benefits to mineral rights? I mean, it's super interesting, right? It is a hard asset like you talked about.
Yep.
Like it's not like I'm just buying ether, right? I'm not buying air. What are some other benefits? Like, is there taxable benefits? I mean, like, can I buy it in my self-directed IRA? Like, how can I do this?
Yeah, so not only can you buy it in a self-directed IRA, you can also do a 1031 exchange, so if you're selling a property, so you can defer your taxes.
Really? So you can 1031 out of a real estate deal into mineral rights?
That's correct.
Wow,
Yep.
That's huge.
Yeah, it is absolutely huge if you're looking to buy or sell properties.
Sure. Well, I mean, think about this. How many people right now are not selling their property because they know they don't have another property lined up because they know that their interest rates on whatever they future are going to buy are likely going to be less than what they currently have today, so they're stuck.
That's correct. And you know what's funny is I'm almost in that same boat. Me and my wife, until recently, we were holding on to rentals that we had $100,000+ in equity in, just because of that reason. We didn't know what to do with the equity and where to put the money. Right. So it's kind of, now that we have a place, that's what we're looking to do. And we just put a house on the market 2 days ago.
Sure.
So, but that's honestly, I won't even argue some of the best aspects. First off, when you own mineral rights, if we're making 1% a month, normally in a note or something like that, it ends at some point. Sure. No, there is no tenants, no toilets.
Right.
Love that aspect. This also means though you don't have to pay property taxes.
Oh, wow.
Right? So there's no property taxes that are owed on mineral rights. Gets even better. There's no liability. You know who holds the liability for any of the environmental risks and stuff are the big oil companies that are drilling for the oil, right? Lastly is all the income you make is taxed at a royalty bracket passive, and only 85% of that income is even taxable. 15% of it comes to you tax-free, whether you use an IRA, 1031, or just doing it personally.
So if I invest $100,000, basically $85,000 is taxable.
Bam.
Wow.
That's nice.
That's very nice.
And so knowing I have no liability, all right, I don't have to hold insurance or HOAs or anything like that. It's going to last for 25 years. You know, those are things that I'm starting to look for. And it's funny, I didn't used to. I think as we get older, we start to get the grays in our beard and stuff. You start looking at, you know what, maybe I don't want to be a wholesaler. Maybe I don't want to be a flipper. It takes a lot of time.
Yeah, very, very good. So you work for Eckard now.
Yes.
And Eckard is a provider of this. Is there any kind of cap? I mean, it seems like...
Oh, absolutely.
You know, it's like I'm thinking about big apartment complexes I own that I've literally been sitting on, and it's got millions of equity in it, right? But in the end, it's like I don't want to sell it because, you know, the 1031 laws, like it's like the regulations. It's like I have to go into something bigger and better, and it's just like it's this never, you know, ending game of looking for something bigger that's probably not going to have the same return that I'm currently have. So like, what does that look like?
Oh man, the biggest downside to minerals, because I make them sound super attractive though, is it's actually tough to get into.
Okay.
So first off, I already told you they're a depleting asset. And you can Google right now, the oil companies, the big oil companies will give you a map and they'll tell you exactly where the oil is down. It's no longer are you drilling and worried about dry holes. That's a thing of the past. Like technology has advanced so far, Chevron knows where the oil is, trust me.
Yeah.
Okay? So what ends up happening though is if I said, hey Eddie, I have 100 acres, it's 10 grand an acre. Chevron's on there, they're gonna pay you every month for the next 25 years, 1%. How many acres would you buy? All of them.
All of them.
Well, that's what happens. So believe it or not, to buy mineral rights, you actually typically have to be put on a buyer's list. And when they do become available, they go right down the buyer's list.
Sure.
Right? And you'll usually be asked first, well, Eddie, how much you want to allocate? Well, I want to allocate 100 grand. Great, we'll let you know when there's $100,000 worth of acres available. When they do become available, they call you and say, yep, here you go, here's your investment package, send the money.
And
well, hey, I don't have the money anymore. Too bad, you get removed from the list.
Next person.
Yep.
Wow.
So that's the biggest downside is they're not always readily available.
Right.
So
interesting. So if they want to get on a list, they just have to go to Eckard, or they go to you, and they can actually get put on that list, and then they just basically have to allocate how much they want to spend.
Yeah, so it's even funny about that. So they do have to go to Eckard. Just go to EckardEnterprises.com. You will fill out a form, all right, just saying that, and then you actually go through an interview process. It is a very small class. So in the last 3 years, Eckard Enterprises has sold about $680 to $700 million worth. That's how much capital they've raised.
Wow.
To only 1,000 different investors.
That's staggering.
So it's insane. And if you really, and I know you interview a lot of people, but a lot of people raise money for multifamily. You'll hear the term 20 million or 50 million. No, it's in a different ballgame.
Yeah, it's different.
But this is also because they're very picky with their partners. It is a very niche group.
Sure.
If you want to be part of it or you want to own minerals, they're not just going to sell them to anybody.
Sure.
Why? Eckard already owns them. They're already producing. Eckard has no reason to sell them. They can keep them themselves and just keep those monthly incomes coming in.
Yeah.
So if you're going to buy them, they don't call you an investor, they call you a partner.
Very good.
So it is very unique. It's like you actually go through a full interview process to make sure that you're qualified to be a partner.
Is this something that a non-accredited investor could get into, or is this primarily a game for the accredited?
So technically, yes, a non-accredited person can because you're buying it per acre.
Sure.
Okay? I mean, anyone can buy an acre of land.
It's a hard asset. It's like buying a house. Yeah.
That being said, if you're buying them from Eckard, Eckard wants you to be accredited.
Sure.
Right? Now, if you're not accredited, you still go through the interview process and stuff like that, and there's ways around it. But ultimately...
Sure. It's a bar for Eckard specifically, but not for buying mineral rights because it's not a fund, it's not SEC regulated, so on and so forth.
Yeah.
Very good. Very cool.
Yeah.
That's awesome. What a cool new opportunity for so many people that should probably consider this.
It is. I mean, think what other asset out there pays you every month that's a tangible asset. You can sell it, put it right on the MLS if you'd like tomorrow, and you can calculate your rate of return before you even buy it.
I can't think of one.
There's not one, right? And you have no liability. You don't hold insurance. You don't pay property taxes.
The true liability is if it stops performing.
That's correct.
Okay.
Right? And so if you look at any of the mineral rights, I tell people, you should expect to get 100% of whatever you put in within a 3 to 4 year window.
Okay.
Okay? And if you're looking through the cash flow model and that's not there, probably just pass on it. No big deal.
Right.
But most of the cash flow models you'll see in that window, that's when you receive 100% of your capital back. Notice though, you never lost the original asset.
Sure. Right.
You still own it.
Yeah.
You could sell it. You're still getting cash flow for 10, 25, 50 years in some cases, depending on where it's located.
That's awesome. So how do they find it? How do they get to this? To Eckard Enterprise?
Yeah, so it's really that simple. It's EckardEnterprises.com. You can just type that in on any type of web search. You can just Google me, Derreck Long, to spell my first name right, and I'll pop up, and you can reach out to me somehow.
How do they spell your first name right?
Yeah, it's DERRECK. Okay. So it's funny if you just I'll pop up somewhere for you.
Got it.
Which is crazy. Cool. I didn't realize I was Googled that much.
You've been out there for a long time, so yeah, that's awesome.
You're actually a big thanks to that. And so ignoring Eckard Enterprises for a minute, Eddie, it's everything that you've brought into the industry. I don't think people realize what you have done behind the scene. There's a lot of groups out there that you run or you're a part of, your fingers in, that has actually educated so many individuals out there that I think people miss the boat on. So just, can I mention some of the things that you've done?
Yeah.
So if you're out there and you're just listening to this podcast, you got to check out not just Think Road, but check out AAPL, right? If you're looking to be a lender or borrow money, you got to go to AAPL. If you're one of those guys and you're like, you know what, I need to network with some of those high-end net worth and investors. I'm talking 10 million plus you got to join the power room.
Sure.
If you're a brand new investor, you've never done anything, you're brand new to real estate, you want to get out of the rat race, you go to Aspire, right? And am I lying?
No, that's all. Yeah, thank you for all the plugs.
Yeah, and like that's something that you really bring to the table. So
Yeah.
I feel honored to be part of your podcast, to be on here.
Appreciate
and just check out Eckard Enterprises, and make sure you check out any one of those other groups I mentioned. Aspire if you're new, Power Room if you're looking for the big capital, AAPL if you're looking to borrow or lend money.
Appreciate that. Thanks so much for being on the podcast today. And if you're not following Derreck Long, make sure you go follow him on social. And Derreck has always been just somebody that's given to the industry. Why I always invite you along, for the ride. You've always been a person who just gives, right? Like lots of information, and you're always well studied. You always know what's going on. So I really appreciate you. Thanks so much for being on the show.
I appreciate it, Eddie. Thank you.
Think Realty, thanks so much for being a part of this show today. If there's ever anything that we can do to support you or give you or help you along the way, we want to help. If you haven't already been to thinkrealty.com to pick up the magazine, do like I do. Get it to your doorstep every single month. Subscribe. Get the Think Realty magazine to your door. I want to say one more thank you to our podcast sponsor, which is CV3 Financial, CV3 Financial Services. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, rate and term refi needs. Visit cv3financial.com/Think Realty. Thanks so much for being a part of the podcast today. Make sure you go follow Derreck, Eckard Enterprise, and follow along with all the podcasts that are coming up here in the near future. Have a great day.